today's a big day for housing reports. You know, housing starts, building permits, Case-Shiller price index, consumer confidence as well, which doesn't relate to housing, obviously. But you know, your previous guest just outlined how we've got such a supply problem in the housing market. So I think maybe the market's anticipating that we're going to get some pretty good housing numbers today, and I would attribute that to the pop we're getting this morning.
And you're still bullish on small cap equities. A lot of talk about a U.S. economic slowdown. Sounds like, Rob, you're not that concerned.
Well, Brian, it's kind of a two-edged sword type situation. I'm concerned about all the global concerns, you know, the trade war with China, and hopefully that gets resolved. But we still don't know. You just talked about Brexit earlier in your show, the problems there. So those fears, as we go forward, if they're unresolved, they're going to buffet big cap multinationals. So I'm looking more towards small cap growth stocks as a safe haven, I guess, because they tend to be more domestic. They're not a lot of multinationals in that space. So it's not necessarily that I'm seeing rapid U.S. growth. In fact, I agree with the Fed that we're starting to see some kind of slowdown. And of course, the inverted yield curve is maybe telling us that as well. But that's the reason I like small cap growth stocks here.
Yeah, okay, let's talk about both those things together then, because you mentioned the inverted yield curve on, I guess, the 3-month to 10-year spread, because 2 and 10s haven't done it yet. Sounds like you don't believe that we're going to be in a recession 12 months from now, do you?
Well, you know, this is all about risk management. You know, as one of your previous guests mentioned, an inverted yield curve is not always right. It's right 85% of the time, but not always right. But there have been it has incorrectly predicted recessions in the past when we had slowdowns. And the other thing too is your other guest was giving some really great information on this. It doesn't happen for six months to 2 years. So we still have some time for cover here. The Fed's come out and said they think the chance of recession is only 25%. So I'm not willing to completely just jump into the recession boat just yet.
Yeah, but 85%. I mean, somebody said, hey, the Steelers are going to win 85% of the time. That's a pretty good bet, right? I mean, so why own any stocks at all then?
Well, I think something else that needs to be explored a little bit more here is what has all the QE around the globe really done globally to yield curves, and that's something that I am looking into, and I suspect that we're seeing some distortions right now as well. So maybe that 85% probability isn't really 85%. I'm still doing some work on that. I'm not, and I'll certainly come out with a note on it. But I'm not really ready to. And the Fed, as I said, the Fed thinks there's only a 25% chance of a recession. They've been wrong before, but I'm still on their side to this point.